This is the MTPredictor weekly market update for October 12th. Here's the current contract of the S&P on the daily chart, and we had our sell signal back here. You can see this was again on the 19th of September and reached the target. The target was reached back on the 25th of September, but we talk about this decision point level, what this target was. It's a decision point where the market needs to make a decision. If this holds as support, then the trend, which was up prior, should continue up. All right, but if they take it out to the downside, then our target now becomes this a DP off of this last swing low here. All right, that puts the S&P, I expect we'll probably see this 1880, 1870, probably maybe even down to 1860, somewhere in this level. We've got strength on the STF indicating some more potential downside ahead. We had that back here. So when the market was rallying up, it was indicating that there may be more downside ahead. We rolled over. A lot of late selling on Friday as well. Maybe people don't want to hold positions over the weekend. But chances are we'll find this level here before we bounce. Now it'll be interesting to see if buyers do, if we do get an indication of buyers overcoming sellers at some point if we come down into this level. Because if we look at the weekly chart, on the weekly chart you can see we've just got a pattern here where we went, this was the wave 3 up where the DP on the daily gave the sell signal there. We've pulled back into wave 4. Here's the daily support just below, right at the bottom of the wave 4 area there. So we'll see if we sell off that one more push down into that 1860 to 1880 level, find some support there, and then we'll see if we close the weekly at some point with a blue buyer's candle indicating that buyers are overcoming sellers in that area, in which case we can already project up wave 5 now, but if we want to, we can do that now using the tools in the software here. And these are your Fibonacci clusters in conjunction with your wave pattern. So minimum wave 5 target and the typical wave 5 target. You can see those levels there, and we'll also take a decision point off of the wave 3 swing, and you'll see there's a confluence of resistance. If this holds as support, right, then we should eventually rally into that level. In terms of the monthly, right, the monthly peaked out right at the maximum wave 3, so this again would be a wave 4 pullback. There is strength on the STF here on the monthly chart. Again, that strength started back here, so back at this point, basically in the typical wave 3 area, it was anticipating more downside ahead. So that's an indication that you could be trailing with the trailing stop. This is the ATR trailing stop that Wells Wilder developed many years ago. So anyway, that would be sitting at around 1813 on the current contract of the S&P would be a stop there. Let's say you're long a basket of stocks correlated to the S&P, you can use that. Alright, so let's check the dollar. That's been an important driver of things here. Well, this is the monthly chart of the dollar here, and we had major support. Alright, here was the ABC correction after the major low here. So in terms of the monthly chart, you can see that we've reached the minimum wave C target here, but this has the potential of going wave 3 up, because this starting point here is a significant low. This is the first ABC correction to that significant low, which Elliott many years ago said is the best time to be a buyer. So this was a very good time to be a buyer of the dollar back here, anticipation of the rally, but the anticipation is that they would take out this wave 3, the typical and minimum wave C targets, and eventually reach the typical wave 3 target. If that's the case, again, we've taken out these prior swings here. These were, swings that were in place over the last couple of years that the dollar was not able to take out. It's closed above those levels. We've traded above that, so that's been taken out. We do have decision point resistance right here as well. So a large area of resistance here. This may end the dollar's run, right? But if this level gives way, then chances are we're going to see this level. Now the Fed, in the Fed minutes, stepped in and said, you know, they don't like the strong dollar. They don't like the fact that the strong dollar is, a headwind to their plan for, keeping stocks elevated, keeping real estate elevated. The dollar continues to move higher, and it's going to be a deflationary sign, which the Fed does not want. And the Fed has said now that they've got to kind of maybe shelve the interest rate hike plan, because they're seeing the rest of the world is starting to deflate. Of course, China and Japan. Japan's been fighting that for 20 years, and they've just been printing money, thinking that will end the deflation, and they just keep slipping into recession. So this is something the Fed is watching, and it's something we suspected that the Fed may talk about raising interest rates, but whether they're actually able to do that in this environment is a whole nother story. So keep your eye on the dollar. I think if it gets above this level here, where the decision point is, the typical wave C, that will be a deflationary sign, and that may cause the Fed to launch a QE4 rather than be raising interest rates. All right, now if this has found some resistance here, again we closed the month with the red sellers. Well, currently a month isn't closed yet, but this is currently potentially a red sellers candle, but we'll watch that. But it's given some relief to, if we look at gold, I don't necessarily want to look on the monthly chart here. Well, there's a monthly buy signal there. Let's look at the weekly chart here. A little buy signal on the weekly chart here as well. We'd have to take out. This is not a standard trade set. You see the STF is red. All right, so it's telling us the larger degree trend is still down, but here's the entry, stop, and target for that. We'll see. You see it's ended the week with the blue buyers candle there, buyers overcoming sellers there in gold, so that selling in the dollar has given some relief to these. We look at silver. Silver did hit finally, after many months, hit our wave 5 target down. All right, let's see, this was our wave 4 there. And let's just project the wave 5 down again. Down wave 5. Okay, bang right into the minimum wave 5 target. We're also going to take a decision point off of the prior major low, which was the wave 3 low here. And so we have some overlapping support. You can see we had buyers ending the week overcoming sellers last week in silver. All right, if they take the high out, Friday's or last week's high, which was 1772, then we should see some follow through there out of this support level. All right, if this level gives way, eventually if they break, probably below that $16 level, then you've got a typical wave 5 target here. And then if we kind of go back here, all right, this was a 5-wave pattern sequence when silver was making the highs there, and so we know the wave 4 DP is the next target where we anticipate the correction to come back to. But if that gives way, then the tendency is they're going to erase the whole 5 waves up. And so we go to the bottom of wave 1 here and take a decision point. All right. And so there we would have some overlapping support between your typical wave 5, so right around that $14 to $15 level, if this level gives way. All right, so again, a lot of this will depend on the dollar. If the dollar, that monthly decision point resistance, that wave C holds, and the dollar falls from there, then these may be at the bottom. If the dollar instead breaks that DP, that monthly DP to the upside, takes out that wave C area and heads for wave 3, then expect them, to reach the next support here in silver, gold, a lot of your other soft commodities. Oil, let's just look at oil here. The weekly sell signal there in oil. If we just put the analysis on, you'll see the target now has been reached. Alright, so we had a little slow up right in the wave B. You can take a decision point off of the wave B. This is a minor resistance, and you see they had that little wiggle around that minor support, and then has rolled over now to the target. Alright, got a little bit of buying as it hit the target there, because that is a support area. There is some strength on the STF indicating any rally. If this stays below the strength band there, may indicate there may be more downside, but this is in an area where that 80, right around that $80 level, where over the last few years that's where we've seen the buyers step in oil and keep it in that $80 to $110 range with your occasional spike. You had the one spike here above the $110 level, but you can see they really brought things back inside that $80 to $110 level very quickly on that particular week once it got outside of that range. So it's pretty much held in that range. And so this may be, again, a lot depends on the dollar, what the dollar is going to do. This could be a major support level in oil if the dollar finds its major resistance there. And then finally, let's just look at the euro US dollar, and probably look at it on the it'll come up with the weekly chart, but I really want to look at the daily chart here. Alright, so on the daily chart of the euro was also making, as the dollar was finding resistance, the euro found a wave 5 bottom here, and it's rallied off of that level. The tendency is that we should get a correction back to the wave 4 DP here. Again, this is all dependent on the dollar, so a lot of this will depend on what happens with the dollar. So we've gone wave 5 down. The tendency is we should get a correction back to this level. We'll see. Alright, so we'll take a look and see how these things play out. Keep your eye on the dollar. Again, that's going to be a big driver, something the Fed is watching, so it's worth keeping your eye on. I didn't get a chance to look at bonds, but bonds yield should be coming into some support, and bonds should be coming into some resistance. Still have some upside in bonds and a little more downside in the yield, but if they move in those directions, then they're going to come into some support and resistance there, resistance in the bonds and support in the yield. So alright, we'll leave it here, and I'll be back next Sunday to take a look and update things from there.